Today, we're going to be talking about why I think you should be buying gold in 2024. It's not all that uncommon in the 21st century to have a skewed perspective on physical gold. After all, it's been disparaged as a quote-unquote barbarous relic for more than a century, and that sentiment has only increased in recent decades. Oh, and by the way, that barbarous relic line that people love to throw out there, it's actually a misquote of John Maynard Keynes. He never said it. He never actually said that particular phrase, but we'll talk about that more another time. So, as we cut through all the noise and try to determine how does gold play a part in our lives in the 21st century, let's take a look at some of the reasons why gold makes sense today. Reason number one. It's money, it's not an investment. Now, this is something that I've talked about before, but it's worth repeating here for a moment because it acts as a foundational piece for having a gold mindset in 2024. Investments aren't money, and true money isn't an investment. That's because money doesn't carry any yield, and it doesn't carry a yield because money is not a risk asset like a bond or a stock or even a bank deposit. True money, on the other hand, is constant. When you stick $100 in your sock drawer for a rainy day, 5 years later, it'll still simply be $100 in cash. At the same time, if you put the same amount of cash in a savings account for that entire time, you may have experienced some realized interest or yield, but that's because you are now subject to the counterparty risk of that bank that's holding your dollars. Gold is true money. 1 ounce holds the same intrinsic value 2,000 years ago as it does now. Now, if you're looking for investment opportunities, you might be thinking, well, I guess gold is out then. Well, sure, as a method of wealth creation, that may be the case, and I would agree with that. However, stick with me, because while you may not care about gold as an investment, you may be very interested in gold as a form of unchanging money. It's a steady vehicle of financial insurance against everything else that carries that counterparty risk that I just mentioned a second ago, and that includes the ever-changing value of that fiat currency known as the dollar. So that's reason number one. Gold is money, it's not an investment. The second reason is that it's not digital, it is physical. Because gold is physical, it can't be manipulated, it can't go bankrupt, thanks again to that intrinsic value we talked about before, and it can't be created out of thin air. Now, who would have thought that in centuries past, one day people would have the ability to pay for something through a stream of ones and zeros, and yet, at the same time, have the desire to protect themselves using this archaic substance of gold to protect themselves from that form of digital money? Here's the thing, guys. There's a lot of convenience that comes with the fact that most of our money at this point is digital. I get it, and I am glad that I get to benefit from it. Interestingly enough, at the beginning of the 20th century, something happened that is somewhat analogous to our situation now, and that is that people started to adopt paper currency more and more and more over physical gold coins and things like that for trade. There actually came a point where banks started taking in gold, like the $20 gold pieces and things like that, melting it all down and creating these large 400-ounce gold bank bars. Well, if you think about it, even though technically their paper money was still backed by that gold and they rested easy knowing that, they couldn't easily use gold for buying and selling anymore because you're not going to walk around with a 400-ounce gold bank bar. You don't have the coins anymore, so what are you going to do? You're going to use the most convenient thing, and at that time, it was paper currency. Now we have this paper currency that we've been so used to for the last 100 years, but now it's on its way out and is being replaced by the next more convenient thing. That's digital currencies. Now, I'm not necessarily even talking about cryptocurrencies, even though that would certainly qualify too. I'm just talking about the fact that the majority of our currency, US dollars, is in fact digital, and it's way more convenient to use than pulling out your billfold and figuring out how much cash you need for your groceries, your gas, whatever it may be. Convenience has always played a big part in the way we do commerce here in the United States and really all around the world. So with that being said, just remember, even though we can all benefit from the convenience of digital currency, we still need to protect ourselves from the vulnerabilities of digital currency, and that's where gold comes into play. It's not digital, it is in fact physical. So that's point number two. Gold is not digital, it is physical. Now, point number three is that gold is constant. Gold is something that we could consider a constant unit of measurement. When gold goes up, that's not really what's happening. In other words, when you look at a chart, when you look at a gold chart and you see it move up maybe from $2,000 to $2,045, that's not necessarily gold itself going up. Or if you look at it on the other side of that, if it's at $2,000 and it goes down, that chart goes down to $1,950, that's not necessarily gold going down. What's happening is that the dollar is either going up or going down. In the case of gold, if you're looking at a chart and the price starts going up on that gold chart, gold is constant. But what's happening is that the value of the dollar, your fiat dollar that's not tied to anything, the value of that dollar relative to all other currencies around the world is going down. It's weakening. And when the value of the dollar starts going down, the gold chart will go up, because when a currency starts losing its value, prices go up kind of across the board. But gold and silver specifically start going up pretty sharply when the dollar goes down. And the same is true in reverse. If the dollar happens to start getting stronger again relative to all those other currencies, perhaps when the Fed raises interest rates or whatever it may be, the perception of gold's value will be that it's going down, because you're looking at that chart and it's dropping from $2,000 to $1,900, maybe to $1,800. And you think, well, gosh, gold's really not doing very good right now. Actually, gold is constant. It's exactly the same as it was the days and weeks before, but the value of the dollar is now going up. So you kind of see how that relationship works. Here's the reason why all of that is important for me to bring out. The fact that gold is constant, that is this natural element, comes out of the crust of the earth. It has these things that make it constant. And that constancy is something that we can rely on when, let's just say, the wiles of fiat money start getting out of control. And when we start experiencing some kind of inflationary period like we did recently here in the United States, the gold is protecting us from that. It's retaining our purchasing power. It performs generally well during periods such as that. But on the flip side of that, what happens if our economy is doing great, the value of our dollar is actually strong, and all of a sudden the US dollar is performing great compared to all other currencies relative to those other currencies? Then even though the value of gold, quote unquote, on the chart is going down, it doesn't matter that we're still holding this intrinsically valuable commodity as a store of value, because we just get to sit back and enjoy the fact that our dollars are actually strong for a little while understanding that based on the very nature of fiat currency, one day we will return to another inflationary period and our gold will be retaining our purchasing power once again. What's even cooler than that, though, is that it's during those periods where the value of gold in paper dollars are down. That is when we can accumulate and we can start building up our gold reserves once again, because it's cheaply valued, and we can prepare ourselves for future situations when the inflation may be worse than it was before. You can look at an historical gold chart and you can see this play out. Even during the bear markets, it eventually recovers, gets well above that, creates a new base, and keeps moving forward. So the fact that gold is constant, it's something that we can rely on even when our currency is doing all kinds of funny things. Our fiat money is up, down, sideways, whatever it may be. We have that constant thing to rely on, and that thing is gold. Well, that's it for today, everybody. If you enjoyed this video and want to learn more, check out the links in the description below, and we'll see you next time.